Hey guys, I hope you're doing well. This is today a video on supply and demand and basically my methodology and what I do as a supply and demand trader. Very simple, naked charts basically kind of. I don't use any indicators. The only indicators that I use are volume, the volume chart. I don't have the volume chart even on right now. I only use it when I specifically need to look at specific candles. I don't use it for like the whole trend line. And yeah, so let me show you what I'm doing. And one more thing, sometimes the camera, when it's focused on my face, it will freeze for some reason because the software I'm using acts like that. But yeah, I just wanted to let you know that. So yeah, so let's get right into the mix. So the first thing I want to show you guys is the fact that I'm on USD JPY. Now, if you're a new Forex trader, you're a beginner, or you're experienced, or you're a supply and demand trader, I trade Forex and futures. The only futures pairs that I trade are gold. I trade mainly Forex pairs because it's still active. It's still currencies. We haven't switched to futures. That's not the. That's. I mean, it works. There's a lot of volatility, a lot of volume, a lot of good money to be made in futures. But Forex is more simple to me. Has better price action. Some people say they can't trade Forex. It's hard, but I don't understand why they say that. But it's the same amount of money. It's just about lots. Like I can make a trade on UJ, and it can be just as much as a futures trade because I have it on high lot, so it doesn't really matter what you trade. But yeah, so here's the two parts. So right now I'm in a bear market on UJ, and I'm looking to sell it long term. But instead of waiting for price action to come all the way and the top part of this range to come to the top part of this range so I can sell it. Instead, what I do is on UJ, it's a slower moving pair. So USD Japanese yen is a slower moving pair. So that means that when you're trading it, you need to start on a smaller time frame because of how slow it moves. And that's a good thing because when you know your pairs, it's easier to trade. And the fact that it moves slower is a good thing because when I'm trading it, I can actually use the smaller time frames as market structure to lead to the higher time frame. So on UJ, the 1 hour is basically the 4 hour, and I can easily go to the 5 minute or 15 minute. And what I can do is I can look for demand zones on the smaller time frames. Um, of course, once I have my confirmation that I'm entering a trade in the first place, like I said, I can enter a smaller time zone, a smaller time frame demand zone once I see clear demand that I want to see in the market. So what that means by clear demand is right now in UJ, I'm planning on buying UJ back up to my zone or my supply zone that you can see that's labeled 3H, which stands for 3 hour time frame because these zones were on the 3 hour time frame. That's why I labeled them. Right now, price is slowly getting demand. We were Friday. UJ was coming back up to fill this range, and I'll show you. So you see those two circled price action things that I have going on here, that structure? Those two are highs. And the reason why they're circled is because I have a rule when trends change, for example, let's say a bearish trend to a bullish trend, there is obvious demand supply. So like for example, let's say a bearish trend the bearish trend is a down move, an expansion downward, a retracement / pullback, and then another expansion downward. And let's say that another expansion downward creates now a price range because when price expands, it expands in a range. It doesn't just go up, down, up, down. When price expands, it goes straight up before retracing itself. And that's what happened here on the 3 hour. We had a range here when there was so much supply in the market that the market could not keep up. And as an effect, you can see all the gray candles that the blue arrow is pointed to. You can see the fall. You can see price falling because of the amount of supply. And so that was created by large capital, large sums of money, large volume. And now, right now, I'm looking for demand so I can buy back up to that level. And the reason I'm also selling at that level is because I did my trend analysis on a higher time frame, and it led me to see that the market is in fact bearish. So what I'm doing, like I said, right now is you go to the 5 minute, not the 5 minute, sorry, the 1 hour. I'm on the 1 hour. I'm waiting for price right now to break this black line, which stands for my liquidity line, because a lot of retail traders that don't know how to trade, they trade support and resistance. and they'll try to sell off of these areas. So they're popular areas that there are liquidity slash money capital from small retailers at. And smart money is going to take these people out, of course. And what's going to happen is price is going to come up, break past those highs. And when price breaks past this black line, it's going to be through an expansion. So you're going to see a bunch of blue candles or a big blue candle go shh and expand. And the cool part about that is once I get that confirmation that the market is in fact filled with demand, I can then return to the 4 minute, 5 minute, or whatever time frame and look for the two types of demand setups that I trade. Which, if you trade and if you watch my YouTube channel, you know how I trade. I only trade two setups. I trade order blocks and I trade fair value gaps. I can trade a order block and fair value gap, or look for one or each on the smaller time frame once it's clear that we have demand. So as a supply and demand trader, what you're essentially doing is you're doing your trend analysis and figuring out what the trend is. Then you're figuring out where you want to buy or sell in the trend. And then when you figure out where you want to buy and sell, you need to wait for a confirmation of clear demand or clear supply to enter the market so you can trade. And yeah, guys, that's pretty much all there is to it. So like I said, when you're going on the charts, always set alerts to, like, I can't be at my desk all the time, so I may not see what will happen here. But it doesn't matter because I have an alert that I placed on TradingView set on this black line that will let my phone know or my computer know what the market is doing so I don't miss my setup. And that's why getting TradingView Pro is important too, is because it allows you to set multiple alerts on different trade setups that you can take, and that will help you become a profitable trader because you won't miss your setups. And another tip is, you see how my screen's on full screen? Always use full screen as a trader. Don't do this. Don't do like I'm doing right now. And you see how you can see everything on my computer. You can see my tabs. You can see like the icons on the left. Like, all this confuses you from actually looking properly at at the screen and focusing on the charts. Because the whole point of trading is is our ability to find setups. That's how we're making money. We have an ability in our brain to look at the price, to look at the chart, and we can determine based off looking at that chart our setups and trade the fluctuation of prices. That's all we're doing to make money in trading. We're trading the fluctuation of prices. So yeah, guys, I hope this video helped, and I'm going to go ahead and end it here. Peace.